The FDIC just shut down Silicon Valley Bank, a Santa Clara-based institution that has been a major financial partner for the tech and startup ecosystems for 4 decades. This is the second biggest bank to fail in US history and the biggest bank failure since the 2008 financial crisis. So what exactly happened and what comes next? Here's everything you need to know in 2 minutes. First, you have to understand what Silicon Valley Bank does. It's a bank that services venture-backed companies like tech startups. You've probably heard of some of them, Pinterest and ZipRecruiter, for example. But recently, rising interest rates and fears of a recession have made it harder for these types of companies to raise cash, which in turn led them to deposit less at the bank. And this meant SVB became short on capital itself. So, the bank decided to raise money to put itself in a better financial position, announcing a plan to sell most of its securities portfolio and a deal to raise around $2 billion in capital. But these efforts failed. And when SVB tried to find a buyer for the bank instead, no one was interested. As news of this spread, shareholders got spooked and the bank's stock price fell dramatically, 60% in one day and another 60% the next. Throughout all of this, SVB failed to communicate with its customers, leading many of them to start fearing for their money and pulling funds, essentially an all-out bank run. Shares continued to drop until eventually the FDIC stepped in to halt trading, shut down the bank, and take control of its deposits, about $175 billion. So what does this mean for the companies who banked at SVB? It's bad news. If their money can't be recovered, then those companies are out of funding and will likely have to shut down. Employees could be out of jobs, which will impact an already reeling tech sector. Experts speculate that the SVB failure was an anomaly and won't be contagious in the banking sector. But nonetheless, the sudden and stunning downfall of a major banking institution is giving some a case of deja vu to the collapse of Lehman Brothers, which kicked off the 2008 financial crisis. It's all leading some to ask, is this history repeating itself?